everyone, welcome to our live trading session. My name is Andria and I'm one of the market analysts here at HFM. So today, what's coming today? Today basically we will examine a bit the latest technical analysis for Nikkei and dollar Swiss. So it's pretty much we're gonna focus on some market trends, some breakout levels. This is what's coming today. Just a bit of a preparation, let's say, for tomorrow's Jackson Hole and Bank of Japan's meeting, basically the Japanese Parliament meeting that in which we will see Mr. Ueda, the governor of Bank of Japan, speaking as well. So let's get started. Let's start with the dollar Swiss, as you can see over here. So I have a daily chart for dollar Swiss just to show you the overall trend. Basically, we have seen dollar Swiss weakening significantly and drifting below the 0.85 level. So I'm gonna move into the 4-hour chart, and there is a reason for that. It's because I want to show how important is this pullback that we have seen this week. After a bit of a recovery from the 0.8430 level, it spiked higher to 0.8748 and is back down again with weakening basically and steadying below the 0.85 level, which is actually a very, very important area to be closely monitored. A bit of a fundamentals just before we continue with the technical analysis. So just very, very briefly, why we have seen this weakness. Basically, everything depends from the US dollar and the concerns about the US economic growth, okay? We had the disappointing jobs report. The Jackson Hole is tomorrow. We had the FOMC minutes, pretty dovish FOMC minutes, and a pretty weak dollar. And the reason for that is all these speculations that the Fed will cut rates 3 times this year. Sorry, my bad. Instead of the previously anticipated 2 rate hikes. So that's why we have seen that traders, market participants, everyone, it seems that it's adopting, let's say, an asset hedging strategies due to these economic slowdown fears. So dollar Swiss, Switzerland in contrast, okay? So it's a compare. Remember that dollar Swiss is comparing two economies, the US economy and Switzerland economy. In contrast, in Switzerland, we have seen that the annual inflation is being held steady, okay, in line with market expectations, and this is something that has strengthened the likelihood of a third consecutive rate cut by the Swiss National Bank. So the CNB so far has been proactive with its easing this year. They have already reduced their borrowing costs in its earlier decision, much earlier than the Fed, obviously. So, and that's what is basically affecting the Swiss as well, the Swiss franc as well. So also have in mind that the dovish stance from the Fed is coupled with the rising rate cut expectation, and we have also the fact that dollar Swiss is a safe haven asset. So the geopolitical situation, the geopolitical tension is something that is driving significantly the demand for Swiss franc, and that's why we have this pressure in the dollar Swiss. So it's geopolitics, it's safe haven demand, the dovish central banks as well. Now let's stick to the technicals, okay? Technically speaking, we are in the 4-hour chart, and we can see that after this rebound, we had a nice pullback. Basically, this rebound has been short-lived, okay? Falling back to the 85 level. 85.20 is the area in which it currently consolidates. However, the fact that it has failed to extend above 87.48, move back down, broken this neckline at 0.8615, extended further down with both intraday moving average, the 10 and 20 exponential moving average pointing further downwards. The price action below both moving average. MACD continues falling, extending away from zero level, so pretty an increasing negative bias from MACD. RSI is back to the oversold territory. It's below 30, and there is no indication for a rebound over RSI. Nothing really that it could signal a rebound of the dollar Swiss. So everything is pretty bearish. So we have, as we can see, everything leads to the conclusion that there will be further room to the downside for dollar Swiss. So I would like to highlight at this point that the immediate resistance of the pair is over here at 85.60. This is the immediate resistance level for the day, while the bottom is at the round 85 level over here. Okay, so a break. Here we are. Another attempt or even a breakout of the 85 level, of the not 85 level, could open the doors to the beginning of August bottom, which is at 0.8430, while you should have in mind that this is a very strong support level. So it's very crucial to keep monitor dollar Swiss, because if you spot any further downwards move that could test the 0.8430 or even break that area, then this could potentially mean the retest of a very crucial low, and I'm referring to December's bottom and the 0.8330 territory. Okay, that it was about dollar Swiss, a very bearish trend. We have seen some intraday consolidation and corrections. However, the bearish trend still holds and may continue if the pair finally breaks the 0.85 and returns below it and extends down to the next key support level and the 0.8430 level. Now, let's move into another interesting asset. Actually, I'm referring to one of the major indices, right? Is Nikkei, okay? Which we have seen Nikkei. We have seen a very positive performance. It has basically showed an impressive positive momentum in August. The market obviously is closed for the day. It will open in the Asia session. So this analysis is pretty much something to keep an eye for the Asia session tomorrow, and because we have the Japanese Parliament as well and Jackson Hole, something to keep an eye on, because it has done some very important and key breakouts. So I'm referring basically to the fact that we had this impressive rally. This is a daily chart for Nikkei. Okay, we have seen it experiencing this sharp rally with a pretty soft momentum, let's say, this morning before it closed, but it went back into a range that we have seen it moving into for months now. Actually, it was moving in an upwards channel in a range from February since the mid of July. It broke it, it moved outside of it, but now it has finally returned into this nearly 1 year channel. It's not only that, it's not only the fact that it moved back into this channel, it's also the fact that it has managed to extend and to held above the 200-day moving average for 5 days now, nearly 6 days now. Okay, so positive momentum, as you can see from MACD. RSI rising, and even it crossed above 50, so another positive bullish signal. The asset it's held and moving further higher above the 200-day moving average for the last 6 days. So that's very, very interesting, regardless of all the challenges that we still have from the fundamental perspective. So the asset is above the 200, is within the channel, is above the 50-day moving average as well. We have the MACD positively changing, aiming to rise above zero. Additionally, the price also, if I'm using Bollingers, allow me just to use Bollingers. As you can see, has also moved above the middle of the Bollinger Band area, basically on the upper Bollinger Band area. Okay, so all these are giving very interesting, because we might see an attempt to breach the 40,000 territory, 40,000 territory, or even higher. Okay, so a lot of challenges. However, currently is at 38. It closed actually the day at 38,380, somewhere here. Okay, so a successful breach, actually a successful break, let's say, a successful break of the last successful closure and a move above the 39 level. Let me just be precise. Here we are around 39 territory. Okay, a successful breach and break of the 39,000 territory could pave the way to the 40,400 territory, 41,000, and even 41,500 zone. That is a very key resistance level. It's a resistance that we have seen back in March, and this could actually potentially give further gains. But we need the confirmation. We need to see the asset extending above the 39,000 territory. Now, on the flip side, a downward scenario. Okay, if due to the upcoming events, if we see the asset falling, the index falling below, back outside the channel, and more precisely below the 200-day moving average, which is at 37,435 level, then the focus will shift to the 20-day moving average for the short term, for the intraday basis. So that's around 36,600 territory, 36,600 territory here, which is a key support as well. However, a drop below in the lower Bollinger Band area could push the price back towards the 33,000, basically on the bottom of the Bollinger, somewhere here, 33,500, 33,130 floor. In summary, Japanese index, the Nikkei, may continue its recovery, but because we have the Japanese Parliament tomorrow in the Jackson Hole. We don't know whether we're gonna see any surprises, but if for any reason it passes the 39,000 territory, which is a crucial range, that will be something that could open the doors further to the upside, as we already discussed. Alternative, a drop back below the 200-day moving average, and a confirmation. By confirmation, I mean a move below the 20-day moving average in the 36,600 territory could basically attract some selling interest. So that was from me for today. We have explored Nikkei's technical outlook, dollar Swiss technical outlook as well, technical analysis, and what's expected. We have covered very important support and resistance levels. So that was pretty much for the day. Hope you enjoyed. Remember to keep an eye on these critical levels and the market developments, and all obviously the news and what's coming, especially tomorrow morning. Stay tuned for our next session. It will be on Monday, okay? And in the meantime, trade smart, trade safe, keep smiling, and have a great day ahead. Thank you. Bye-bye.